Right, so let's actually talk about identifying zones in the market. And when I say this, I mean supply and demand zones, liquidity areas, and imbalances. So I said in the previous video that we have, of course, a big imbalance and a supply zone into there. Now I'm hoping from the first section of this chapter, the market flow section, you understand that supply zone and you understand that price imbalance area. Now, if not, that's cool. That's what this video is going to be for. I'm just going to talk through actually finding these zones on your chart and being able to identify them. So if we look here at GBP AUD on the weekly chart, we can basically see when we started off, we were trading here. Okay. And what that leaves us with is a big open space above. Now, we know that supply and demand zones are really the birth point of the price imbalances. So if we actually just look at this, watch this, a consolidation zone before a big downside fall. So that right there is a supply zone, right? Now, a supply zone with a huge open space before it leaves us with a price imbalance in the market. So, to find imbalances, we must first really identify areas of supply and demand. So, that's the first thing you're really going to want to identify on your charts is those areas of supply and demand. Now, I recommend identifying them, both in line with the trend and not. You don't need to identify all of them. For example, now that we're trading here, do I need to identify these zones? No, we've already passed that point, okay? But what we could do is actually go ahead and identify the zones that are going to potentially be important to us, like the ones in the previous recent lows and high points. So, for example, I would indicate these levels here. Now, this one's interesting. All right, if we just skip this back, you probably have these two levels on the chart marked out, right? But the reason that I would probably put more emphasis on this one down here, and this is why it's important to actually identify these zones, is because if we see this point, right, we've got 1, 2, 3 equal lows. Now, what does that lead us on to? The next point, which is liquidity. Okay, so supply and demand zones come first, and then from there, we want to identify the liquidity. Now, the liquidity, as we mentioned in the liquidity videos, is identified by finding equal highs and equal lows in the market, finding areas where retail traders and most traders are going to have their stop losses positioned, and then using those areas as the liquidity regions that price is probably going to trade through. So, for example, we can see here that this 1, 2, 3 equal highs was taken out. The liquidity was taken out. Okay. We then traded back beneath this point, and that's where we formed the bounce from. But if you'd have understood to identify that liquidity, it could have saved you from trying to sell from this resistance because you know there's liquidity over that level, and chances are the price is going to go up. So for this perfect example, this example right here, we have then supply zones and demand zones marked on the chart. The supply zone being our big target, the demand zones being these possible reversal points. However, because we've incorporated the liquidity as well, we can also see that, okay, chances of this level holding up are slimmer. And this is probably the point we're going to want to look to buy from because there's multiple equal lows here under a key level. We are likely to go and take the liquidity underneath there. So let's drop this to the daily chart for a nice clear picture there. Okay, 1, 2, 3, 4 equal lows in and around this level leaves it open for a decline. So letting the market do its thing, we will see that we trade through into that liquidity. And what we've actually done is fulfilled a lower time frame zone. Now, what we really want to focus on here when we're looking for the overall direction of the market is the higher, more accurate time frames. Okay, the weekly zones are very likely to be met. Now, we've seen here the liquidity zone there was met. That supply zone didn't hold up, but we haven't yet traded into this one. So I'd still be keeping my eyes on this zone as an area for price to trade into. Now, this leads us on to the next thing. What if we actually just formed a supply zone here with another price imbalance, right? And that is how we formulate those near-term trading opportunities. So if we look at this one as a supply zone now, that's opened us a new price imbalance. So we can expect for the liquidity in this area to get taken out, for price to trade into here, but we still have this zone unmet. We see that price is willing to actually push through. So we can actually focus on, this liquidity in this area still being refilled to go trade into this zone. So as an example, if we were to look to sell this market, we could then take it down into this zone, which would be that fulfillment point where we are probably likely to reverse. Okay. So here we have a nice example there where you can see the weekly levels and the daily levels, now that we are identified closer, being this supply zone and imbalance, have provided some great trade accuracy. Okay, so from there we take off, and that actually shows, if we skip to the weekly chart, how effective these zones are and why it's important to identify supply and demand zones, along with, very importantly, the liquidity, because the liquidity is where stops are going to be taken out. So you don't want to be buying in or selling into a market with stop losses where everyone else has them. So there we go. We've identified some supply and demand zones. We identified the liquidity, and it provided us with some really accurate levels to trade. Now, I would be interested, looking at it again, in actually buying from this zone now that we've taken the high of that zone. So if we just look at the daily, see where the market is now, what I'd probably be looking at here then is, okay, we've seen the supply zone react once, but now it's been taken out. So if we can push up, bounce from this zone, we can probably go and form some upside. So as we can see, looking to buy from that zone to take the market into, nice and clear next zones in the highs. Nice and simple. We could just look for, key levels in and around this point, 1.8450. Probably go and get a nice long into that level. So there we go. Once again, using the zones, key levels, liquidity, supply and demand to actually find our tradable opportunities. Okay, so with supply and demand zones, it's going to be a constantly flowing thing. You are always going to be adding new zones, always going to be changing the zones that are there. Now, for now, I'd probably be quite interested in this zone, see how this holds up. And if we can hold up, we could probably see a bounce from there. Now, if we don't and we push through, we will simply identify the next zone. Now, this shows me the structure has given way, liquidity under these lows has given way, and what do we have above? Well, quite an interesting supply zone right there before that big drop off. So now maybe I will target that point for a selling opportunity if price can get there. So not everything is going to work how you want it to, and not everything is going to run perfectly. But what you can do is, of course, continually add dynamic zones. Now, it'd be quite interesting, in my view now, to see if price could go and take out these lows, because we've got liquidity under there. As you can see, it does. Trades straight through that liquidity. We've traded back into that weekly supply zone that we spoke about earlier. And now from here, I would probably be looking for the market to go long. So there we go. We can see numerous times new zones forming, dynamic zones forming, keeping your eye on liquidity, okay, equal lows, keeping your eye on weekly supply zones and the big supply zones, the big demand zones, and actually using all these to your advantage, of course, while targeting long-term those bigger levels like that 1.940 key resistance. So stay dynamic, focus on the market structure as it moves. Supply and demand comes first, but never ever forget liquidity, because some zones are not going to hold up purely because of the equal lows, the equal highs, and the fact that the liquidity has to go and take those levels out. So always think of liquidity as a very, very important factor. And when it comes to the supply and demand, we can use them for entries and we can use them for targets by identifying those price imbalances. So hopefully this video has been useful for identifying some zones. I've showed you a few live examples there in the market of where we can actually use liquidity to avoid losses, and where we can actually use the supply and demand to identify good points to buy and sell from. So in the next video, we are going to look at identifying trade targets, basically a follow-on from this one. We're going to be looking at targets, entry points, stop losses over the next few videos, so that we can eventually formulate some top quality setups. Then I'll show you some examples, and hopefully by that point, you should be quite ready to actually go and tackle the market with the knowledge that you've learned. So thank you for watching, and I'll see you over in the next video.